Hello, hello. Good afternoon. I have no concerns today. Internet is back up and running, not streaming on my phone. It's all working well. Hey, man, Maniac, how you doing? Hey, BL. Hey, K Goosey. Hey, Jen B. Hey, Nick. How's everyone doing? I took a note down of everyone who's asked for the early draft. So once that's ready, I will get that sent out. We'll give it a couple of minutes before we get started. Just want to see, can everyone, I know this might be a big ask, but can everyone who's watching now just type something in the chat? Just say hi. Everyone else who hasn't already said something, put it in the chat and say hi, all right? Hey, Sabir, thanks for that. There is a bit of a reason why, so I'll tell you shortly. What about everyone else? Okay, so why I'm asking you or to respond is I have actually prepared a slides, short one, a quick one, maybe, on fundamental analysis, right? How to do fundamental analysis, what to think about, how to actually trade the news setup or during the news as well, just briefly. So if everyone responds and everyone lets me know, my thought was that I'll do the daily market analysis now and then immediately follow on with the fundamental analysis or teaching you how to do fundamental analysis. All right, so it will go on for a little bit longer today. If you guys are all here, your schedules are good, then we can do that. If not, then the materials are ready, so we can always postpone it to another time as well. So should we do it today, or should we do it another time? Do you have time today to sit through and watch and learn about fundamental analysis? Right, just because a couple of you have asked about it from the last time I checked if there's anything else you all want to learn about. So I've done up the slides today. So if you are ready and available, we'll do it. But if not, then we can always do it another time. Hey, M Leader, Angel Case, good to have you all here. Okay, so thank you all for attending. Today we are doing the daily market analysis where I'll go through the fundamentals of what has happened last night. Not a lot, actually. And then the technicals, put that together. We'll look for some trade setups potentially. Right, so a lot of trade setups that we identified from yesterday didn't trigger because, like, we were thinking, we anticipated that it wasn't going to be a big, it was a news event, but it was likely going to retrace or not do too much. And it actually did. I sat there waiting, watching. I saw the dollar shoot up, shoot down, and then after that retrace, and then pretty much set right across. So a little bit disappointing. I only had, I think early in the day, I had that couple of trades, but then nothing much else or nothing at all through the evening, right? So that was my trades for yesterday. Bill's able to show how to scalp effectively next time. Okay, I'll add scalping as the next educational topic to get to. Okay, so now that we have more people on the session, right, I just wanted to let you all know that I have prepared some material, some educational material to help you through or to show you. It's not going to be complete in any sense, just because of the time. But I do have some fundamental analysis material that I'll teach you how to look at fundamental analysis, how to consider, what to think about, and then some briefly how to approach the markets with news events being released, how to plan for it as well, right? So if you guys are good for that, put it into the chat. Let me know you're good for that, because I don't want to do a session and then everyone starts dropping off and I'm pretty much sitting here talking to myself, just because you got something else to jump to. All right. So if you're good for that, put it into the chat. Let me know. Good for it. And then we'll do it right after, during the same session, but right after the market analysis. Okay. So let's keep going. A quick disclaimer before we get started. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. And please remember, do your own due diligence. The contents of this webinar are not intended to be a recommendation to trade a financial product. You have to make sure that whatever we talk about fits with your own trading strategy, fits with your own trading methodology before you do jump into any trades. Okay? Good. Thanks for that, Jen. And hi, Albert. How are you doing? So let's get to it. Looking at the news, right? Why I did those slides for the fundamental analysis today as well is because I had a lot of time, right? Not a lot of news happening today, and also yesterday we did have Fed Chair Powell testifying to the House of Financial Services Committee, but didn't move prices as much as the previous day. Okay, we also did have the Bank of Canada with their interest rate decision, as we expected, or most of the market expected, holding rates at that 4.5%. So no big surprises there, nothing for the rest of today as well. I mean, there are some news, but I don't think these will be big price movers. I did write about it today that it looks like it's going to consolidate within the range. I think the focus in the market now, probably a chance to take a breather. Then we're probably going to be getting primed for tomorrow, where we have the big news event. Potentially big news event. Firstly, from the Bank of Japan with their monetary policy statement. Policy rate going to stay at that minus 0.1%, and the press conference. I haven't found a way to watch the press conference. Probably not going to as well, because it is in Japanese. Don't understand Japanese. So I will look at a policy statement. We are not anticipating a big surprise from the monetary policy statement from the BOJ either. Okay, so it looks like it's not going to be a big surprise, but like I've mentioned, through the week, we do have the Governor Kuroda. This is his last press conference, last policy meeting. There has been talk, could he surprise markets? Firstly, possibly not changing policy, but possibly adjusting or removing or adjusting the current limit on the JGBs, the Japanese government bond yields, currently at that 0.5%. The last time, I think I told you guys this, in December when he did it, we saw the yen strengthen massively. Could he do it again? All right, so that's the focus early tomorrow, and you can see that it is tentative. So anywhere between 7:50 a.m. to 3 p.m. this is going to be released. Typically, they do release it at 11, about 11ish a.m. GMT plus 8. Okay, so that's going to be the big news. Pound GDP, the UK GDP coming out tomorrow, minus 0.5%. Previously expected to be 0.1. I don't think this is going to do too much because the big fireworks is tomorrow night. Tomorrow night, with the non-farm employment change was 517K, big surprise from Feb, right? Feb was 260, expected 193, came out at 517. This time 517, expected 224. I don't think we're going to see another 500 number. We never know, but I don't think we're going to see another 500 number. I think what's most likely the case is possibly 250, 260 at best, right? Maybe even 280. But I think it'd be a good number, but possibly a modestly good number. Okay, so those are the news, and then we have the Canadian employment numbers at the same time. So what I'll always suggest, I'll tell you more about this tomorrow as well. I don't know why I'm jumping ahead. But what I always suggest during this Friday, with the Canadian and the US employment numbers to be released, I'm definitely not trading the USCAD because it's just too much data to pay attention to try and interpret and decipher to enter a trade. Okay, and it also fits well with the way we're looking at our fundamental analysis later, where I will be you could start practicing. Don't do it straight away. Start practicing with these big news events coming out tomorrow. Okay, not trading tomorrow, too risky. Yeah, I do for myself. I do love to trade news events, especially non-farm payrolls. But I do look at it on the scalping method. I do look at it on M1 time frame. I don't suggest this to a lot of people. So good idea there, BL. Too risky, not trading tomorrow. Okay. So nothing much today. What we've seen now, going to the dollar index. Right, dollar index. Our list is here. So this is the 9th of March now. Right. So the 9th of March. What I also do, I just remember that I haven't done this, is that I will also publish this post, this analysis here like that, onto my TradingView, just so that you guys can catch this summary sheet here at the end or after the webinar. Okay. Again, I forgot. If you do have any questions at any point in time, please feel free, put it into the chat. Whether you're on YouTube or on TradingView, put it into the chat. Let me know. I'll be happy to further address your questions, elaborate more, guide you through the process. And if you haven't already, do me that big favor, click that like, click that subscribe button, click that little rocket ship button as well. Okay. So this was what happened yesterday. Zooming in a little bit just to show you guys. Dollar, this was Wednesday, the dollar went up to hit in the afternoon. We spoke about this, hit that 105, almost 105.90 level. And then through the day, right after we finished our session at about 4 o'clock, it was still trading at 105.70. And then in the lead up to the news event, it started trading down. Right, it started trading down from 105.70, came down towards that 23.6 level, retracement level at 105.45 or 105.50. At the news event, all that talk, no real directional bias. We saw the dollar shoot down, hit that support level of 105.35, spike up to that 105.76 or 75. And then after that, retrace, right? Within that hour, it bounced around. I think it was about a 2-hour session. So it started 11 to 1 a.m. I was watching the whole thing. I didn't find any clear directional push. Price slowly creeped up at 2 a.m. to hit a high or consolidation at that 105.70 level. Too many screenshots. Yes, please post a comment at TP level. Okay. That would make me, I'll have to type a lot in here. Okay, I'll try and do that. Okay. So what was I talking about? Okay, so the dollar hit that 105.70 level and then consolidated. Right now, trading lower again. Right now, trading lower again. I do think that we will see it consolidate within this range all the way to tomorrow. Okay, so it's going to consolidate within this range all the way to tomorrow. If it does break below 105.35, I wouldn't rush into a trade, right? I wouldn't think that it's going to be a good sustainable move to the downside. Why? Is because I think that tomorrow's news, again, non-farm payroll here, right, could see the dollar either, if a strong number push strongly to the upside, breaking above that 105.87 level, strongly up, or consolidate in here and then break that support back down towards that 104.70 level. All right, so it's still very unknown. Don't try and guess what the non-farm payroll is. It's just almost impossible to guess what it's going to be. So I would, say, especially today, Gen B is a good idea. Going out late, take it easy. Don't rush into any trades unless you see something very clear, very straightforward. All right. So updating this, I would say that dollar index is going to range between 105.35 and 105.90. Okay, so that's the view on the dollar trading within this range. All right. Okay, I will do gold shortly later on as well. All right. Oh, by the way, if you guys are taking screenshots and looking for entry take profit levels, I'll do that. But you can also pay attention that usually or very often I do write it up before the session. So I come in the morning. First thing I do, I write up all the as much as I can on the analysis. So I did CAD, Euro. I'm sure I did dollar index today. Dollar index, CAD, Euro, Pound, and the Yen today already. Okay, so it's there as well for some reference. So that's done on the dollar index. I'll share with you some very interesting view I have on the Aussie dollar. Oops, no, I want that back. Jump to this. Okay, Aussie dollar, super interesting. Through last night, I did have a couple of trades as it was trading lower because it was rejecting at that point, at that 11 o'clock hour. I saw it shoot up, hit that level, and then it started rejecting. I had one or two small trades to the downside, but it's tiny trades to the downside. And then I left one overnight. So I went at about 1 o'clock. I left one overnight. I closed out there. Okay, this morning at about 9 when I came into the office. So that's my Aussie dollar trade. What I was going to share with you all is I'm now considering, right, looking at the dollar, the Aussie dollar, I'm now considering the possibility, you all know I hate counter trend trades, but I'm considering the possibility of a counter trend trade to the upside, right, to the upside. This is a resistance level now. Right, so I'm looking at that. I did think about it just this afternoon. I had one tiny trade. It was like it moved 2 pips, and that's when I really hate counter trend trades. I got out of it, but it's just needs to clear this point. I'm highlighting the body, right, of 0.6615. Right, it needs to clear 0.6615. Then I'm thinking possibly a counter trend trade to the upside, especially after Friday. If price does break above 0.6630, right? We could see this push towards the upside. So I'll be, this is a big counter trend move. If we could see, Friday. Okay, I'll just put it here for now. All right, if we could see this push to the upside. What I would do, so about a 20 pip, 30 pip stop loss, first a 60 pip, and then after that possibly higher. What I would do, or I was planning to do, is that if I do see this trade higher, then I would size down, right? I'll go small, I'll go half the lot size or smaller than that. And then after that, once it goes up, it breaks a level, I'll get in some more, and I'll just stack my trade to the upside as a counter trend reversal up. Okay, so that's the Aussie dollar on the view that we could see forming a good support level here and then a big rebound back up. Anyone interested in a counter trend trade? Okay. Alternatively, if we do see this break lower, break below that 0.6566 level, then downside move, next support level on the Aussie is very far away. I would say at about that point there, right? I like that point there. That's on H4. So coming back to the H1 time frame, I would say if it does break below 6566 or 65868, could get to 6515 or 6500. Again, looking at this, the last time it broke above this level was in November last year. Can it drop further? Yes, definitely. There is more downside at 6150 as a big support level. But I'm looking at this as, could this form a near-term low with the current price forming quite close to that near-term low, looking for that big retrace. Okay, so not a trade for now, possibly a trade after non-farm payroll if you see the news being not so great for the dollar, or even if you just see price moving to that direction, this could be a idea. All right, so Aussie counter trend up. I have to put in about 6640 and about a 30 pip stop loss. Okay, counter trend 0.6640, 30 pip stop loss. Okay, hang on. 30 pip, TP, 60 pip. I'm not going to put in the price just because I would be referring over and over again and it drives me mad. Okay, so that's Aussie. Done. I've been buying Aussie up from the support level. You're marked a few times, scalping, thinking the same, but no more trades this week, needs to close profitable. Yeah. Since the 1st of March to now, I'm up about 2-point-something%. So I am trying to protect those numbers. I'm trying to average at about that 4.4 to 5%, not kill myself on my trades. Just a steady 4 to 5% a month. I'm super happy on that. So, I'm still trying to protect it. I want to try and do that counter trend, but I'm going to try and protect any potential downside. So that's the Aussie to the upside. So for example, what I'll tell you is that if it does go up and then we see price moving to the upside, if it comes close to my take profit, I'll drag this higher. I'll move this to break even. If it breaks that 0.67, then I would put in another trade, that way. Again, stop loss about 30 pips, take profit again at about 60. Again, once it breaks and moves higher, then I'll put this to break even, and I'll just keep stacking trades up. Okay, so that's one way that I do longer term trades, stacking trades to the upside. You don't have to stack. You can just do one good trade up. I'm just trying to see what I can do to the upside. So that's the Aussie. Now looking at the Kiwi dollar, very similar setup. Very similar setup. And also in addition to that, we do have a bit of a support forming there on the Kiwi dollar. Right? It's coming very close to that level. So, I wouldn't say go for all of it. I wouldn't say, all right, look for a counter trend here as well. We could be looking for a counter trend. Do either one. Do either one because you don't want to jump into all the different or too many different counter trend trades. In case, and we all know that counter trend trades don't always work out. So in case it doesn't work out, at least you have one bad trade rather than Aussie counter trend, Kiwi counter trend, and it just go counter trend on everything, and then it all goes against you, and it's a terrible, terrible trading week. All right. Can you tell us the psychology? Can you tell us, is there any psychology behind currency pair like stop loss hunting type? No, I see the thing. Yeah, there is some stop loss. It's not really stop loss hunting. I don't believe in stop loss hunting. I think that it's a scenario where it happens because everyone has a stop loss there. I don't think prices or brokerages are definitely pushing price to a level to hit your stop loss. It just so happens that everyone sees the same picture, everyone analyzes it similar ways, everyone has a stop loss at a similar point. So once it gets to that point, then we see that big impulsive move because it hits everyone's stop loss. All right, so I hope I answered your question there, Sabir. Okay, so for example, this is the Kiwi dollar again, counter trend 60 pip to the upside, 30 pips to the downside will be below this trend line, I would say at about 6140, right? 6140, especially if it breaks above this resistance, could be a counter trend trade up. Again, not for now. I think that the dollar still hasn't figured out its directional bias yet. So don't rush into this trade. You just need to set up properly. 0.6140, stop loss 30, TP 60. Okay, I would say that choose between either NZD or AUD. All right. Okay, I bought gold at 1840. What will I do now? Close or wait? Okay. So wait, any questions on the Aussie or the Kiwi? I'm not looking for any trade to the downside just because support level is quite near. It looks like it's going to range. I'm just looking for that breakout potential, right? So these are my two counter trend trade ideas. Then I'll look on the other pairs for trade following ideas, which are possibly going to set up faster and get me into a trade faster. All right, so just because you asked about gold, let's look at gold first. You bought at 1840. Oh man, that's a long time ago. Well, not that long ago, it was a Tuesday. You bought at 1840. Man, I would always say, have a stop loss, especially on gold. I'm doing this just to see how much you're down by. That's a big move down. That's 300 over pips to the downside. This is not financial advice again. I do think that if, for example, our counter trend trades work on Aussie or on the Kiwi dollar or both, we could see this rebound up. But I think that for 1840, you do have to first break above 1820, then 1830, then to 1840. It's hard. it's hard. It could get there. One bad non-farm payroll number, and it could get there. But I think that the downside risk is greater than the potential recovery. So I'll leave that. I'll put that analysis and leave that to you, Tilu. Right? I'm not going to tell you whether to close or wait. It does look like, okay, so now looking at a gold, it does look like it's forming that support level here, could trade back up. Not looking for any trades. I haven't entered any trades on my Forex fund challenge just because it's ranging there. I think yesterday I did have a quick, in the morning, I did have a quick trade down, just that small move to the downside. Nothing happened after that, and then now it's sitting right across. So, if I drew just a quick box here, you see that it's really in that range. And also now that I drew that box, it's not a great setup, but it does have some resemblance of a bit of a head. Not quite a good shoulder, and then possibly another level there. So if the dollar does strengthen, all gold needs to do is to break below that 1809 or 1810 level, and then we're going to see big downside potential. So just be extra careful there. I would say on gold, possibly no trade unless it breaks a clear level. Right? No trade unless it breaks a clear level. No trade unless it breaks a clear level. Okay. I think yes. What was it? I said yesterday 1820. Yeah. So if it breaks above 1820, be flexible. We could see upside. So it looks like it tried, but then it retraced back down. I'd rather close with pain and try a scalp up to recover the loss. Personal opinion. Yeah, that's possible. I mean, I would have closed at 1840. I would have closed at 1830. I'm scalping gold, so I don't want to hold it for that long. I was actually scalping it to the downside. So I would have closed at 1830. At this point, it's only more pain. It's only more pain. So just, close it out. Look to buy it back up. If it clears above 1820 and try and buy it back up, might be a good recovery plan rather than trying to hold onto the pain and hope for the recovery. Okay. So that's gold done. Now looking at the yen. The yen, we were looking at this. Unfortunately, it didn't work out. It came down. It did test that 136.90 or 137 level. It rebounded up. It's blocking my view here. Okay. It rebounded up and then failed to continue up and then retraced back down. So if you did get into this trade, you would have hit stop loss. Main reason here is not because of the dollar, right? Dollar set in a consolidation. It's really what the market is now considering. This downward move, right? Despite how the dollar is now trading down. Hang on, let's look at this. Okay, not doing too much. Now the dollar is trading down, but this downward move since early this morning, I think it's the market shifting that sentiment towards possibly big downside potential for the yen or the yen strength. Okay. So what I'll be looking for here is if the yen could, let me see. There we have it. It's that move to the upside. We have found through last night, found that 61.8 Fibonacci retracement level. Right now, I'm looking to see whether it's going to come down and test this level again. Right? If it does come down and test this level, looking for it to break that 136.47 or 136.50 level. If it does break down, especially through to tomorrow, then we could see that big downward move, if we hear any surprises to come from the Bank of Japan. So at this point for the yen, if we do see dollar continuing to trade lower, if we do see the yen push down, then we could be looking for some downside potential below 61.8. Stop loss quite big, 60 pips. Take profit to the downside here about 700 pips maybe, right? About 100 pips to the downside, given that it's broken that 61.8 level. Okay, so 136.40. So US yen break 61.8 fib level, below 136.40. We have a 60 stop loss of 60 and a TP of 100. So I'm looking at that. All right. Next up, any questions? Hey, Signal Mark, good to have you here. Hey, Jamil, good to have you here. Now, looking at the yen, if it does bounce up, you could look to buy it up. But I would say, most likely I'm not going to be trading on the yen today. In fact, I'll add on to this and say possibly wait for tomorrow, right? If it breaks below that point, then we can look to sell. Directional, going to be a bit mixed. Why I say that is because if I look at this on the 18th of Jan, where is it? Here we go. Is it this? Yeah. This is what happened on the yen, right? At 10 a.m. They did not change policy, but everyone expected a pivot. Everyone expected them to possibly talk about increasing rates or tightening up or doing something. They didn't do anything, and that's why we saw the yen pretty much go from that 128.56 level straight up within the next 1, 2, 3 hours up to that 131 level. So a lot of things can change on the yen very quickly. Right now at that 136, I'm looking more on the downside. If it does shoot up, then naturally break above that resistance, you can buy it up as well. Okay. Pound dollar. Look, we had so many setups and it all didn't come out as we expected. In fact, it's setting up now again, right? So yesterday we said, okay, if it doesn't retrace, we can look to sell down straight away. It didn't. It sat there in consolidation. Then we say, okay, it's going to retrace, test this 1.1850 level, maybe break a little bit beyond and then trade down, right? So it actually only now traded above that 1.1850 level and sitting right across, right? And sitting right across. So I would say that this view would still hold to the downside. I'll move entry a bit lower to about 1.1833, so below 1.1835. If it does break to the downside, 30 pip stop loss, 60 pip take profit, or 1:2 risk reward ratio to the downside on the pound dollar. So it retraced. So yesterday we said retrace to test resistance. It didn't. Only now it's retrace to test, sell on rejection. So now we're looking to sell on break of 1.1850. So say about, in more particular, 1.1835. Stop loss 30, TP 60. You might figure by now that I'm terrible with remembering prices. So, once I don't look at the charts, I don't know the price. Okay, so we're looking for that similar move. If it does trade up, pound is not something that I would want to do a counter trend on just because of the way it's been trading strongly. You can see that when it climbs, there's a climb, a push, and it's just an impulsive climb, but then a very big drop. Climb, 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 and a big drop. Climb, 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 and a big drop. So even if it does climb, I don't think this would be a sustained, good for a sustained retracement to the upside. I'm still looking for that drop downwards. Okay. Next up, euro dollar. Look at that. Hang on. I'm super interested in my Aussie. So Aussie's not doing anything yet. Okay. Euro dollar. Yesterday, again, we spoke about maybe upside if it broke above 1.0560. Didn't. It's trying to do that now. Sell down if it breaks below that 1.0525 level. It didn't. It rebounded back up. So I'll take that away. Our trades did not trigger because the candle did not close above. Right now, it looks like it's forming up there. So I'll say about 1.0560. No, it can be a bit safer here now. It should be a bit safer here. So I'll say about 1.0565. Stop loss could be about 30 to say about 40 pips. Take profit about 70, almost a 1:2 risk reward ratio to the upside on the euro dollar. Why the euro dollar is moving to the upside is really now that we've had the fireworks, the unexpected fireworks on the dollar from the FOMC over and done with, the focus shifts, right? The market focus shifts onto the euro and onto next week. Next Thursday, we do have the ECB with their press conference, rates decision and press conference. So just be extra careful. The question now is, we know 50 basis pips is pretty much priced in, pretty much decided as an interest rate hike in March. The question is what's going to be after March. Are they going to continue with a 50 basis point rate hike again? I shared this earlier in the week where ECB member Holzman, I think I said it correctly, Holzman, said that it could be at least four more 50 basis points rate hike to come, or they need at least 4 more 50 basis point rate hike. I think that, or rather I'm anticipating some potentially bullish move to come from the euro. Before this week, I would have been a little bit uncertain. Right, before this week, I've been a little bit uncertain, but with the stance that the FOMC is taking, the Federal Reserve, the US Federal Reserve is taking, that they say, hey, we might or we could speed up rate increases depending on data. They're taking a hawkish view, right? They're taking a hawkish view. If the ECB doesn't match that hawkish view, then we could see a big move to the downside on the euro dollar, right? A big downside move. And we've done so much to recover from all that threat of parity and to bounce off that 1.0482 level in January. We saw that big upward move and it's retraced back down. So I think that quite likely the ECB is going to match the view or the sentiment from the FOMC. Okay? Possibly President Lagarde might say, March is done. Maybe the next one or the next two, we are definitely going to do 50 basis points. So watch out for that. All right. Again, reminder, guys, all of you watching, please help me out. Click that rocket ship button. Click that like and subscribe button on YouTube or on TradingView. Please. Thank you. And also at the end of this market analysis, I will be transiting into the next part, which is the education, where I'll be teaching you briefly about how to trade news events or which news events to pay attention to. Okay, so euro dollar looking for a possible push to the upside. Found a good support at 1.0535. You can see that it's found that support here, now tested, and again quite recently. So we could see a push to the upside on the euro dollar, hesitation level at 1.06. So I'm looking maybe a buy at 1.0565, 40 pip to 70 pip. So euro dollar, buy 1.0565, stop loss 40 pips, PP 70 pips. Okay. Questions, all good? Let me know if you have a question. If you're lost, let me know. I will find you. Okay, so US Swiss franc, it's moving now again to where we were talking about last night. It broke briefly, went back up. If you did get into this trade, you would have some heartache, and then now it's trading back down again. If you didn't, then it's going to, now you probably would have got into an entry to the downside. In about 14 minutes time, the candle is going to close. If it does close like that, we could see a continuation. This is forming to be a little bit of a signal, a little bit of a hint of what could come, right? Dollar index and the Swiss franc, or rather Swiss franc's directional bias does relate quite closely to the dollar index. And we look at the dollar index trading lower, rebounding slightly now at that level, but we could see it come down to test. So looking at the Swiss franc, oops, what am I doing? We had it about there. I would say that, let's take that away. If you haven't entered a trade already, we do have last night's or yesterday's low at 0.9388. So we could be looking for that to break, especially on our close coming up. You could be looking to sell down from about 0.93. Let's be a bit safer and say 9385. Actually, I don't really like this trade because I want my stop loss up there at 50 pips. I want my take profit down there. It's right in the middle. I'll tell you what, don't do it. Don't, let it move. Let it move. There are other trades to get into. I'm not super keen on the Swiss franc. All right. Could go down, but not good risk reward. Okay, so I'm not super keen on that trade. Is EURCAD similar to EURUSD? I'm not sure. I will have a look at the EURCAD for you there, Wayne. All right. Can you tell how to work Fibonacci retracements? Okay, I'll do the next session or the next session. The next session will be about scalping. Educational session will be about scalping. The next session will be about Fibonacci retracements. All right, Jamil? We will do that. Yeah, it looks like it's forming up nicely. I don't like it just because of the risk to reward, but if you're going to be managing this trade quite closely, you're a bit more risk non-adverse, I don't know what's the word, more risk-taking, then you could get into the US Swiss franc to the downside, possibly to that 0.9350 support level. Okay. All right. USCAD didn't drop, right? It went up, it tested that level. So we're looking for it to test that level and drop. The news came out. I'll move this a bit to the side first. The news came out and said that they were holding rates. The Bank of Canada were holding rates. Market seems to be, or economy seems to be doing well, but there are external factors. Let me just bring that up for you guys. Where is it? Let me see. Okay. Why the CAD weakened? Why the CAD weakened is because of those lines here. Economic growth came in flat, lower than projected. So a bit of a weakness, a bit of a not so positive view there. Spending and exports increasing, weaker than expected GDP was because of sizable slowdown in investment because of interest rate increases. Restrictive monetary policy continues to weigh on spending. Business development has weakened. Investment has weakened. alongside slowing domestic and foreign demand. So it's slightly good, news in terms of increasing the or holding the rates, but in terms of the economic data, doesn't seem to be doing quite well. Inflation eased to 5.9%, lower prices from energy, durable goods, and services, and then expected to hold its current level, conditional on economic developments evolving broadly with the MPR outlook. Okay, so it's like good news in terms of holding rates. They didn't do anything, but then not great news in terms of how the economy looks like it's performing. So I think this view still holds. All right, because it is closer to that 1.38 level, I would say that you have that chance of, let's say, at this point, if it rejects 1.38 to about 1.37, be extra safe. Let's be extra safe and say 1.3780. Stop loss 40 pips, take profit 100 pips to the downside would be a good move. And then alternatively, if we do see the dollar strengthen, then we could see 1.39, which is that tail there, as a resistance. Okay, so I would say that we also could have dollar strength, right? 1.3825, take profit 60, 70 pips to the upside. Stop loss can be quite tight at about 30 pips because this is a trending scenario to the upside. You can see that it's following that trend up, right? So it's tested. I had it as this morning. No, I had it at this morning. So I was looking for it to test this level and then rebound back up as well. So counter trend, I don't like the counter trend move, but I'm looking, if we do see the dollar strength continue, then we could see this push towards the 1.39. This would be my preferred move to the upside. Those of you who like counter trend, you could be looking to sell it down. Okay, so I'll highlight as 1.3825. USCAD buy from 1.3825. Stop loss. Pause my stop loss again. About 30 pips. Take profit about 70 pips. Stop loss about 30 pips. TP about 70 pips. I would say that counter trend opportunity exists. Ooh. Right, so you all know what we're talking about there. Okay, any questions so far? All good? Anyone with a question or concern or something to ask? Let me know. And again, if you haven't already, do help me out. Click that little rocket ship button. I know I say it a lot. But I am looking for that boost. I'm looking for more viewership. All right, so help me out there. So we have that done. Okay, so Wayne asked about the EURCAD. Let's have a look at that. EURCAD, is it similar to the euro dollar? I wouldn't say it is similar. Yeah, look at it on H4 first, just to get an overall view. I wouldn't say it's similar. Big resistance there at 1.4642. It is breaking a level here now, forming a bit of a support at 1.4550. And then with that, this is on H4 time frame, we do have a upward trend line supporting that move. So back to the H1 time frame. You know what? I think that it looks like with the EURCAD, for it to push higher, we're going to have to see the euro dollar gain that strength. Right? We have to see the euro dollar gain that strength to push it up, or we have to see that CAD weakness, which based on what we're talking or had been talking before, we were talking about potentially the euro dollar pushing up. We were talking about the CAD possible weakness pushing up. So it looks like it could happen. It could happen, but just the way it's sitting in consolidation there, I'm not too certain. If I put in the MACD, just have a look, and I guessed it as well. On the H1 time frame, MACD looks like it's going to cross over to the downside, right? Looks like it's going to cross over to the downside. The last time it crossed over to the downside, you see, right? It consolidated at a level. Once it crossed over, had a bit of a gap, then we saw that push down on the EURCAD. So I'm looking, could a similar move happen? Could it sit in that consolidation and then retrace back down? Right, so I'll be a bit more careful on the EURCAD. I'll add in one more just to see whether I can convince you guys and convince myself as well, is that the RSI does look like it's not doing too much on the H4 time frame. Yeah, it looks like it's going to turn back down a little bit. How I look at it, I think that it's going to consolidate there. It's going to consolidate. Might show some brief upside potential, but I think that we might see a retracement to the downside. Okay. Hope I answered your question there, Wayne. And then next up, pound yen. Sure. I know it was setting up for something quite interesting when we were talking about this yesterday. Pound yen. Oh no, wait. It didn't do too much. Did I say anything about pound yen? Pound yen selling below 163 support level. No, I think that was from way back. Okay, that was from way back. Pound yen right now at that 162 level. I would stay away. I wouldn't do pound yen just because all the uncertainty about the yen, and I'm expecting. Right, we're thinking about the pound dollar trading lower. Looks like it's forming up quite nicely. So if the pound dollar does trade lower because of that pound weakness, then pound yen should trade down, right? Should trade down. But if you look at it now, it's trying to push back up. Why is it pushing up? It's because of the US yen pushing to the upside. So I think I said this yesterday, pound yen likely to be that conflicted currency pair where you're going to see that volatility bounce around with no clear direction yet. I would prefer, let me zoom out and have a look at this. Yeah, I would prefer very much so if the pound yen did trade down. I'll move this support level here to the tail at that 161.20 level. If it did trade down to that 161, then you could see that big push, similar to what we saw late Feb. Look for it to come down, test that level, and bounce back up. Right? So because of that dollar weakness or expectation for that dollar weakness, I'm looking for this and then a bounce back up that way. All right. So pound yen, I'm possibly looking at down to 161.20 first. Okay, I'll take those away for now. Just keep it a bit simpler. Alrighty. Good. Any questions? Any other questions? Did I miss anyone? Oh, good. Super, fantastic. Okay, so now with that, if you've got no questions, no dying questions, then let's get to the next part of this. Wait, okay, no worries, Lydia. Let's get to the next part of this. There we go. All right. fundamental analysis, right? Fundamental analysis. This is the educational section of the webinar. So I tried to integrate this as much as I can. I am having to do the slides up to keep it up to date and to help you guys tweak it to what you guys should know. This is part of my big course. So I used to run courses in person and online. In-person courses would take 2 days, right? 2 days just to get through the information, and then a whole month of coaching, webinars and in-person and online coaching, reviewing trades, understanding your psychology, understanding why you got into a trade, why you closed out a trade. So that was a whole program that I developed, and sold it for thousands of dollars. So you guys are getting this free, all right? Absolutely free. All you have to do, click that like and subscribe button. So fundamental analysis, what we're looking at is I will be sharing with you a watch list, right? Oops. The watch list, things that I watch. Okay, it's not the list to pay attention to, but this is what I watch and why I watch it. Okay, and then the theme, right? A lot of people just go, oh, I need to know all this different news. They forget about the theme of the market. So I'll tell you about the theme of that, and then briefly on how to do the trade or how to trade the fundamental analysis or the news event. Okay, we've already done the disclaimer, so that's done. All right. All right, I'm sure you all know the economic calendar, forexfactory.com. What I always suggest to you all is that, it's there. This is the first thing that I have open on my computer every day. Just helps me plan out my day, right? Just helps me plan out my day in terms of time, in terms of when I want to get into a trade or whether I have other things to do. Because if I know that a news is going to be released, I won't get into a trade, right? A relevant news. For example, tomorrow at 2:30, will I get into a pound trade? No, I wouldn't, because I know at 3:30 there's a pound news to be released, right? So it just helps you with your planning. It helps you understand where, whether there's a sudden shock that could be coming. Okay, so economic calendar, please use it. Even if you don't understand anything about it, you use it just to highlight to you where the danger is, right? It's important to know where the danger is. So you use it just to highlight to you where the danger is. Okay, at any point in time, if you have questions, please feel free to ask. In the economic calendar, in Forex Factory, in the data, and I'll show you this so many times already, they show you the previous, they show you the forecast, and they show you the actual when it's being released, right? They show you the previous, the forecasted number, and the actual. So there is the whole description here, right? If the actual data is better than the forecasted, the currency should strengthen, price should increase. If the actual data is equal to that, then we're going to have some fluctuation, possibly nothing much at all. Actual, then better than previous, then the currency is going to strengthen, right? Price increase. And then in the worst case scenario, you have actual not matching or mixing with the forecasted and the previous data. Then you're going to see, if it aligns, you're going to see the big strong move. If it doesn't, then you're going to see some brief move and then a quick retracement again. Okay, so what I would like always to say is, to think about it, right? A lot of times when we look at economics, everyone gets confused, they get worried. Think about it as this is your current pay, right? This is your current pay. If you're promised an increase, a big increase, and you actually only get a small increase, would you be happy, right? How happy would you be would mean how much the price is going to go up by. If you get a big increase and you got a super big increase, then you're going to be super happy. Price is going to move strongly to the upside. So you don't have to think about it as economics, as percentages and numbers. You can just relate it back to some other data, possibly making it easier to understand. Okay, but this is straightforward. what I want to share with you is the range of economic data releases, right? The range of economic data releases, how I look at it, right? How I look at it. This is all. If you're gonna take a screenshot, I don't think I can post this up, but if you're gonna take a screenshot, do that. Don't share it around, although this is going up online. But yeah. First off, we have the household data, right? We have the household data. Then we have businesses. Then we have banks. Then we have government, and then we have central bank. Right? As we all know that household data can come in the form of retail sales, employment, consumer sentiment, unemployment rates, non-farm payrolls, a whole bunch of information. So a lot of information in terms of households. Then businesses is more the PMI, right? PMI and business sentiment. Then banks comes down to building permits, right? I'll tell you more about that next time. Government is GDP, and then central bank is really inflation, interest rates, and monetary policy. Okay? Looking at it this way, just a number of information flowing through. Which one do you think is going to have the most impact? Which one do you think is going to have the most impact? Mail reminders, good, yeah. Hey Tommy, how are you doing? Anyone going to tell me which one do you think has the most impact? Central bank. Thanks, Wayne. Okay, so yes, the central bank. How I prioritize it, or how I put it in a hierarchy, I look at it as households, businesses, banks, government, and central bank. I rank it this way, right? These are the 7 news items that I pay attention to. If you read my analysis on TradingView frequently, you'll notice that I do ignore a lot of other news events, and I mostly focus on this 7. Firstly, monetary policy in terms of interest rates and the statements. They always come together, QE or now even QT. Okay, QE is quantitative easing. Sure thing, M leader, no worries. QE is quantitative easing, QT is quantitative tightening. Easing is when they were pushing money into the markets. Tightening is when now they're buying it back to reduce supply. CPI, Consumer Price Index, Gross Domestic Product, the GDP on the government side. Banks, we're looking at building permits. If you don't know anything about that, I will tell you more next time. PMI for businesses, and then households, employment data, and consumer sentiment. Okay, so that's how I rank it in terms of the impact it's going to have. Okay, then we come down to the theme, right? So if you're always looking at these 7, it's going to simplify news a lot already. Now I can tell you that there's a whole bunch of news on Forex Factory, construction output, goods trade balance, NIESR, GDP, household spending, manufacturing sales, all that. There's a lot of bond action, right? There's a lot of information there, and it's going to get confusing. That's the reason why I filtered it down to this 7. But you don't even have to focus on this 7 all the time, right? The mistake a lot of people do is, 1, they try and focus on everything, right? They try and focus on everything, they end up having no trades at all. 2, they come to this point and they focus on all 7, and then they still go like, wait, I'm confused. PMI, recently I've been telling you PMI is there, but I'm not paying much attention to it. Building permits, I have pretty much not paid attention to it for a very long time already. And the PMI as well, right? Why is that so? It's because of the theme of focus. No one thinks about the theme of focus, right? What's important right now? What's going to change the way economics, or what's going to change what they're focusing on, right? What's going to change prices the most at this point in time? So in 2008 and 2009, we had the global financial crisis, the GFC. Right, the GFC. That's possibly when that's when I started doing FX. So I was always doing equities before global financial crisis hit, and then I started trading in FX as well. During that time, global financial crisis, people were losing jobs left, right, center. Banks were closing down, going insolvent. Businesses were going out of business. Debt was sky high. Focus was on employment and wage growth. How many more people are working, or how many more people are losing their jobs? If they are working, are they getting more money, or are they getting less than before? Right? So back then, big focus was on employment. Whenever a non-farm payroll number came out, we saw big volatility on the dollar and right across the board. A bit less so now, unless we get crazy numbers like 500 last month. Then 2020 to 2021, we had COVID. Right? We had COVID and markets closed down, economies closed, people couldn't travel, there were businesses slowed down, everything was on shutdown or slowdown mode. The focus came to GDP, right? It is the country producing, right? It's the country producing. So the GDP comes into play. Not so much focus on employment because everyone was losing jobs or working from home. Right? It was GDP, it was governments pumping more money, it was the QE or stimulus packages pumping money into the market to try and prop up the GDP. Following on from that, now in 2022, 2023, maybe into 24, 25, the focus is on inflation, CPI, and on the interest rates. Right? Are we as a globe heading towards recession because of inflation being sky high? And if inflation is sky high, they need to increase interest rates to try and bring it down. So all that focus right now is on inflation and on interest rates. You can see that when a PMI number comes out, it doesn't move prices too much. Apart from a crazy non-farm payroll, employment numbers has a small spike and then a retracement again, either to the upside or downside. No big change in direction. The big change in direction comes from the inflation data and the interest rates. Okay, so it's very important to remember or to consider the theme of the market, not just the news itself. So when we talk about, right now, inflation data, interest rates, how do we all relate it to, just to give you a brief overview of how it works. When inflation is high, what needs to happen? When inflation is high, they need to increase rates to weaken the economy to slow inflation down. Right? When it's high, they need to increase rates to weaken it to slow inflation down. So it's a balance between inflation, GDP, and interest rates. What typically happens when you increase interest rates is you get a stronger currency. How we had it all the way before this period of rate hikes, everyone, ECB was at zero or negative rates. The Bank of Japan is in negative rates. The US was at zero, right? Everyone was at minus rates or cutting rates because back then they were cutting rates, right? They're cutting rates to try and stimulate growth in the economy. There's no reason why you would put money into the bank because you'll be losing money by saving. You might as well go trade, you might as well go invest, you might as well buy businesses. So it's stimulating the economy for growth. And that's why we have this problem that we have now, that massive inflation. Because not only were they cutting rates, they were also pumping money in terms of stimulus, COVID stimulus. Keep pumping money in. We saw big, fast inflation climbing to the upside. Now they need to slow it down. They need to hike rates. Okay, so that's why the theme right now is on inflation and on interest rates. Any questions so far? Alrighty, cool. So inflation, don't worry about the calculation. I haven't put in the CPI, how to calculate CPI, and how to calculate GDP and all that. The main thing you need to know, and why every central bank now is increasing rates, is that the target CPI for any economy, for most economies, is 2 to 3%. Is 2 to 3%. Okay, this question was actually asked last night during Powell's testimony. One of the committee members actually asked him, like, why 2 to 3%? Why have you decided on 2 to 3 and not 5? Right? So what he said was, well, that's actually what the global economy or the global central banks have came through a study to understand that at 2 to 3%, it's a steady rate of growth for an economy, right? A steady rate of growth. Because the question they were asking is like, wait, if you're trying to get it to 2 to 3, you have to increase rates so high, you would have to result in a big unemployment number. Is it worthwhile trying to chase a 2 to 3% number? Why not 5, right? So his answer was, it's a global benchmark where, through studies, they found that the 2 to 3% number is where you're going to see a steady rate of growth in the economy. All right? And then I'll show you here. Look, why I say that is the theme, is the important thing. On the 13th of October last year, right? Last year, US CPI data year on year was released. 8.3, expected 8.1, came out 8.2, right? Worse than before, better than, or higher, not better, higher than expected. What happened? So it's not that one. What happened was we saw this big move to the upside. This big move to the upside on the CPI data. Wouldn't happen on any other pair, on any other news, but the CPI for now, right? Because inflation was growing faster than they had expected. And that's why we saw a big push to the upside on the dollar, because expectation was, right, in October, inflation was at 8.2%. Feds are going to have to increase rates further. Given they have to increase rates further, the currency should strengthen. Landry just asked what's the prediction for NFP tomorrow. I'll do that shortly, all right? Then in November, right, so that was October. In November, 1 month later, we have it going from 8.2, expected 7.9, came out 7.7. That big downward move. Now that big downward move on the CPI. Okay, so that's the impact of the CPI data, and that's the impact of understanding the theme behind the news release, or which news release to pay attention to. All right, so there's interest rates, how they adjust or tweak or tune CPI data is through interest rates decisions. And I'll show you here, it's not just about the interest rates. This is the Aussie dollar. I did a back test on the Aussie dollar. This is on the daily time frame, so you can't really see the move exactly, but these were all the rate hikes. These were all the rate hikes since June on the Aussie. And you can see that although they hiked rates, the Aussie dollar traded lower. Although they hiked rates, it traded lower. Same thing over and over and over and over. This one went up a bit. So this was a bit of an exception here. This one traded down, then went down. This one went down, 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 down. Slight exception here, right? So out of 1, 2, 3, 4, 5, 6, 7, 8, 9 events, only 2 times after a rate hike, we saw price close slightly higher following the news release. So as much as it's the interest rate decision, you also want to see what was the previous trend, right? What was the previous trend? Was it going to the downside? Was it that dollar strength pushing prices? That's why, although they hiked rates, dollar strength was still in play. We saw prices trading lower. So it's not just that one decision on rate hikes or not, or how big it is, but it's also on the previous trend. Okay, so when I talk about previous trend and you start thinking about trend, you think about the impact of your news. Short-term change in price depends on existing trend. Employment change, retail sales, PMI. Longer term, you have your GDP, your CPI, and your interest rates decision. So what I mean by short-term change in price or short-term fluctuation and the medium to long-term effect is short-term, this will be the news event here. Right, price might be trading to the upside, might be trending up, and then after that, the news comes out, oh, bad employment data, for example. You see a brief spike down, and then after that, that push back up again, continuing on with trend. What could happen during this time, if you don't know too much about trading the news and trading the events, is that you think, oh wait, I'm ready to sell. Right? You'll be ready to sell. Could be selling right at the bottom. Next moment, it goes back up. So just think about the trend, think about your resistance levels, support levels as well. Compared to a big news like inflation, interest rates, and GDP, especially interest rates and inflation, is that whatever the trend is, especially with interest rate decisions, price tends to consolidate. Right? Price trending up, lead up to the news, you see price sit right across. Waiting for the news release. Good news, we're going to see a big spike up to the upside. Bad news, we're going to see that big drop downwards. Could reverse the trend. Okay, so this is just the really snapshot view of understanding how these news events work. How I want you to start planning your trading when it comes to a news event. And that's actually a good question there coming from Landry about the non-farm payrolls. Okay, we'll apply this here. So first thing, think of it. Is it a big or a small news? Right? Let's say, for example, now we think about the NFP. Is it a big or a small news? Hey, could be medium, right? Let's say it's small news. So what's the trend? So what you should be doing at this point is looking at all the different currency pairs. What's the dollar doing? It's sitting right across, or it's trending slightly lower. What's the yen doing? Is pushing to the downside, or what's the Aussie doing? Trading up, right? So what's the trend? Where are my support and resistance levels? So for example, if you see the Aussie is gone down, it's rebound back up, right? It's trying to rebound back up now. What are my support resistance levels? You might have a good resistance near term. You might have a support down there, and then your next resistance is possibly way up there. Okay, so what to do in a good news or in a bad news situation? Okay, great. If I were to look to buy this up, it would mean that it's going to be bad news for the US. Right? It'd be bad news for the US to see the Aussie dollar push towards upside. So in a bad news situation, I'll be looking to buy on the Aussie dollar. Right? Say for example, pound has been trading down and then set right across. Right? Trading down, bounced a bit and set right across. We got a near-term resistance. We got a big support down there. What to do if we see a strong non-farm payroll number? We could see the pound dollar trade lower because it's dollar strength. Then in a good non-farm payroll news release, we're going to look to sell the pound dollar. All right. And then what am I going to ignore? I'm going to ignore the USCAD because there is their own employment numbers to be released. Putting that, you have that table there, you know what to pay attention to at 9:30 when it's being released. You're not going to scroll through all the different charts. You'll be like, okay, good news scenario. I have my Aussie, I have my Kiwi, I have my Euro, for example. Right? Then you know which pairs to watch, which ones to pay attention to, which ones to totally ignore. Okay, which ones are trend following, which are counter trend as well. You might say, okay, this is counter trend. Bad news scenario, we might have maybe the yen trading lower It'd be a trend following scenario. What about deciding on the currency pair? Yeah, so you look at all that. Once you have, let's say for example, you have all this put in there, then now I'll be looking at this. Okay, bad news scenario. I've run out of space to draw my stuff. Okay, so say for example, let's say the euro dollar. Okay, so this is the Aussie here. This is the Aussie that we've just drawn here. Compared to the euro dollar, let's say that in a bad news scenario, it's going to bounce back up. It was trading down, and then now it's bouncing back up, right? But it might have found a support there. Resistance might be way up there. And then you look at this and go, between the Aussie and the euro, which one would I prefer? In a similar situation where it's bad news, we're likely to see both push to the upside, right? I would look at it and say, okay, Aussie would have to break a resistance immediately, and we could see once it breaks a resistance, we could see a big upward move. Compared to the euro, and I will have my stop loss nearby, right? Take profit up there. Compared to the euro, that it could trade up to that resistance, but at that point, my stop loss would have to be, quite wide. My take profit on the resistance would be maybe 1:1 compared to the Aussie dollar. We should have a better risk to reward. Then I'll rank it. Right? I'll start ranking which ones I want to pay attention to in terms of, okay, Aussie had better risk to reward. I'll look at that. Euro, maybe a bit later, or euro after the event. Now that we got a weaker, for example, now that we got a weaker US dollar, interest rate decisions to come from the euro next week, put it all together. It might not move now, but I'll wait for it to climb up, break above this resistance level, and then trade up. Right? So I have Aussie now on the news release, or as the news release, trade it up. After that, Aussie dollar by 9 o'clock on Friday night is not going to move too much. The next focus will be onto the euro dollar for that longer term move to the upside. All right, so I hope I answered a question there, Nick. No worries, Kegusi. Okay, so that's all I have there for you guys. I just wanted to keep it short and sharp. Again, please test it out first. See how it works on the different pairs and different charts, on the different news events. Please don't jump into a trade on Friday just going, all right, I just did a fundamental analysis session, and I start jumping into trades. Do test it out first. Do try and understand it. If you have any questions, reach out to me. Drop me a message on TradingView. I'll be happy to guide you through that further. Thank you, BL. With that said, we have come to the end of the session. If you haven't already, do me that huge favor, click that little rocket ship button, and also on YouTube, help me out, click that like, thumbs up button. It does help massively. And again, with all that said, please trade well, trade safe. Possibly not a lot of trades to be had today, so please trade carefully. And I'll see you tomorrow. Take care now. Bye-bye.